and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down 0.76% on the S&P here, as you can see. We did see NASDAQ getting hit much harder there, down 2.6%. Semiconductor finally got hit today, almost down 4%. Dow flat, Russell down a little bit. Transport's up a little bit. Energy is up close to 4%, so it looks like still there's some sector rotation occurring, right? The energy sector has been heavily beaten down for years, and so potentially there's some positive signs there, seeing energy sector to see some positive moves in the last couple months. Actually, I think since late 2020, we've seen rallies on the energy sector. Banks are up about 1%. Biotech is down 2.5%. Emerging market is down 3%. Grayscale is down about 5.5%. We did see gold and silver up 1.5% on gold. Silver is up 4%. And VIX is up about 7% there. Let's stick with the S&P 65-minute chart here. On Spider, let's check out today's price action and figure out what we can expect going into tomorrow. So first of all, let's kind of zoom in here. So it's very interesting. So what we've been seeing last several trading sessions here is that the market has been actually gapping down every day, right? This was what? I think this was Thursday, Friday, or Wednesday, Thursday, Friday, Monday today. So we saw a gap down middle of last week. And then we saw a rally and fill that gap. And then we saw another gap down next day. And then we rallied up, fill that gap. And we saw some downturn here on Friday. And then we gapped down again today. And then we rallied initially. But it looks like that short-term moving average is no longer supporting the buyers. You can see short-term moving average acting as support here and here. Some whipsawing action here. There's a support on that short-term moving average for the last 3 hours on Friday. Gapped it down, and then we got up here, and it looks like finally that short-term moving average is currently supporting the bears. Not to mention that that gap that was open this morning is actually slightly open. And so with that, because I think some of the other times where we saw a move and filled it all the way and closed pretty strong on the day, but today we actually ended the day weak on the last 2 hours. You can see on the last where I pretty much gave up here. So the gap was never filled, and short-term moving average is now not rising. We're not seeing my short-term moving average rising. We're not seeing short-term moving average moving sideways. We're actually seeing currently that short-term moving average declining, and that down gap from this morning is now open. And we saw a weakness, bears coming in pretty hard, pretty much erasing all that rally that we saw this morning. So we are seeing a little bit more strength and selling pressure coming into the market. Looking at things in the short term, we have to give benefit of the doubt to the bears because we got now lower highs and lower lows, right? We're now back below the short-term moving average. My short-term moving average is declining. This, that down gap is still open. It hasn't been fully filled. And with that, we got lower highs and lower lows. So in the short term, and there's that support, that pivot there, that's been broken, right? Potentially almost like prior support is acting as a new resistance, it seems. Some people don't even look at this as a head and shoulder formation. I'll be a little bit cautious about that head and shoulder formation. Just from what I can remember, I don't know last time we actually saw head and shoulder fully playing out. Fully. I mean, we might see some short-term corrections or something like that. But from what I can remember, I don't know, since going all the way back to 2015 and 16, a lot of these these short-term head and shoulder formation, because we're looking at 65-minute chart, right? So we're looking at short-term. There always been some sort of trap. It would, we would have this formation, and then the market would kind of have its downs, and all of a sudden it does something like this and goes right back up. That's how I remember these head and shoulder, because so many people look at this formation, everyone shares it on Twitter, and you know what happens? You want to be different. You don't want to follow the masses. When everyone's talking about it, when everyone's anticipating it, it ain't gonna play out. Nowadays, everyone has charting software. It's free. Just get a brokerage account or just sign up at TradingView. It's free. You can get it. We can all look at these levels, and the market loves to fake you out. So I wouldn't put too much weight on the head and shoulders at this point. So in the short term, we just came to a conclusion that we got these lower highs and lower lows. So we want to give benefit of the doubt to the bears in the short term. But that's not the end of it. We understand that there's a short term and there's a mid-term and there's a long term. We must understand all terms, right? So let's zoom out here, right? So if I zoom out in the mid-term, so now we're looking at things like this, right? Are we bullish or bearish in the midterm? We are bullish in the midterm. Why? We got these higher highs still. We got that low. So now we have to assume that market is coming down to cultivate that higher low. That's exactly what I said before when we saw this decline, right? Remember what I said? You can go and check back in late January. In the short term, we got lower highs and lower lows. But in the midterm, we still want to give benefit of the doubt to the buyers, because in the midterm, we're still in an uptrend, right? So we saw a sharp decline, but it got right back up here. So keep that in mind. We have to understand, not only focus on the short term, but midterm. So in the midterm, my midterm moving average is still rising. My long-term moving average still rising, right? Short-term bearish, midterm bullish, long-term bullish. So what we're trying to figure out now is the market cultivated higher highs. Is this market, where is this market is going to cultivate that higher low? That's what we're trying to figure out. Is it going to be here? Is that going to be here? Is that going to be here? Is that going to be here? No one knows, right? And that's the point. No one knows. So we're going to try to figure out which level it might be, potentially the level. Obviously, each day market will give us just a little bit of hint so we can potentially figure that out, right? So here, we still have this little gap, still slightly open. That's where we found support here. You see that? This morning when we gapped down, we found support and we saw that price going up. And when we saw that decline, we stopped there. So we got that little short term. For bears, if you're a seller here, you're a put holder, you're a seller, you want the price to go down, you need to see another gap down. That would actually really expedite this downturn, because this down gap right here that was open this morning, that is still open. So if we see another down gap, this is going to come down to probably 383 and retest my midterm moving average and coinciding with the gap area if we see another gap down. If now we start to fizzle, we got this support here. I'm going to put this level right here, which is coinciding. I'm going to do it right here. So I put a fib here, right, using this peak and this valley. So there's, you see my fib area here, here, here. So this prior resistance coinciding with my first level of fib is gonna be the next support. And then obviously the next support will be 382, right? The gap area coinciding with that midterm moving average. As of today, hard to say how this market is gonna behave. When we're in a midterm uptrend, shenanigans can happen. We're in a short-term downtrend, so either shenanigans to the downside can happen. Because we're midterm uptrend, we could have shenanigans to the upside, like something like this. Out of nowhere, this in gap zone just goes straight up. So this is a time where if you're a long-term investor, obviously, and a position trader, and I've been advocating, right? I've been emphasizing this, like over the weekend and all last week. I've been closing out my exotics. I've been closing out my aggressive longs. On my call options, on all the indices, a lot of my triple shares are gone because those are the exotics. Those are the, the aggressives because, like triple shares on the NASDAQ is down, 3%, almost 3% on the NASDAQ. Triple share, that's down 10%. Semiconductor, SOXL, so triple shares of semiconductor, which is down 4% today, they would have been up down 12%. I was out of those, took my profits. So this is a market where, if you have those aggressive longs, and which I've been saying all last week and on the weekend video, that you want to get those out. But for long-term investing stocks, you hold them. You hold through them because a lot of energy stocks were up today. I was actually looking at my portfolio. I was very surprised. A lot of energy stocks, a lot of these bank stocks were breaking out to the upside. I was watching a lot of these, airline stocks like Delta Airline stocks were going up, like, Southwest Airline stocks were going up today. We also saw, which stocks were, like cruise line stocks were up today. And a lot of these restaurant stocks were up today. Again, also not to mention energy stocks and also gold and silver, which I own a lot in my portfolio. So those stocks were up a lot today. So just because the market is down a little bit, that does not mean like, there's everything is going to come down, especially when we're in this uptrend, right? So that's the strategy you want to implement if you're a long-term investor. Understanding what are your aggressive longs, what are your midterm longs, what are your, the long-term longs. And then as the market kind of balances itself out, you're gonna have some of these stocks that's been lagging is gonna make a move, and stocks that have been doing well, leading in the early mid part of last year, they're gonna start to coming down. Tesla's down about 9%. A lot of these leaders, Amazon, Microsoft, Facebook, Netflix, they're all down today. That's been making a move, but all those stocks have been lagging. It's been making a move to the upside. So when you're in a primary term uptrend, you will still see some of the stocks that will do well that have been lagging. Look at these NVIDIA, AMD, some of these semiconductors. It's been doing really well, actually, last 6-7 months. And pretty much all throughout ever since the March lows, they've been coming down quite a bit today. So let's check out that oscillator here. So the oscillator is coiling and making lower highs and lower lows. We saw that happening here, 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 here. And then how it bottomed was, you can see we kind of came down here and here, and that's where it bottomed. So just looking at how it bottomed last time, right here, and that oscillator came down to here, as you can see, maybe that's where it's going, that's where it might be bottoming, and you can see how it went straight up after that. So currently though, oscillator is giving us lower highs and lower lows, giving us that we are in bearish selling pressure days in the short term, and market is trying to discover where that higher low is gonna be in the midterm, and that's what we're trying to figure out. I'm giving you this level here, 386, 384, and 382. So tomorrow, depending on how this market behave, how it closes, we'll get a little bit better idea where this market is gonna cultivate that higher low. I'll come for you. Enjoy your evening and good luck trading tomorrow.